Hey guys, welcome back to the channel. This is Jimmy. I'm going to talk about OPM today. And for those of you who are new here, if you like the content, go ahead and click subscribe, click on the notification bell, and give me a thumbs up. All right. So let's get right into it. What is OPM and what does it really stand for in the investment world? OPM is an acronym basically for other people's money. And when we investor talk about OPM and what it means is basically a leveraging term where you use other people's money to invest and to build wealth, right? So today I'm going to touch on 5 types of OPM that I'm currently involved with, and I think that these are the 5 common ones that people are usually involved with when they're investing in and leveraging with other people's money. Well, so the first type is a very common type. It's our mortgage, buying a house, right? Buying a mortgage. Um, it's basically 80 to 90% of the bank's money and only 10 to 20% of your own money as a down payment. And even at 10 to 20%, some of it might be someone else's money as well. It might not be totally, your own. Like for example, I can go down as low as 3%, do an FHA loan, or 5% owner occupied, right? And go into and have the bank finance me 95%. So that's an example of one type of OPM. I'm using the bank's money to buy me a house, and as it appreciate over time, I reap all the rewards and all the appreciation if I do go on and sell it, right? The bank just basically makes the money off me from the interest rate that they gave me, but not the appreciation of the home. So that's one type of OPM. Another type of OPM is just basically a small business loan or any kind of business loan in general. So when you want to start a business, unless you have a lot of money to front up to start a business, you most likely will go to a bank, give them a proposal, and then they'll decide they want to extend a loan to you or not for your business. And if your business plan is good and they like the idea, they'll extend a loan for you. So once again, you put a little bit of your money in and you're borrowing a lot more to open your business up, leveraging, right? Using other people's money. A third type of OPM that I'm currently using is it ties into the mortgage, but I'm using it as a rental property. So when I buy properties that I rent out, I put in 20% of my own money and I borrow 80% of the bank's money. Once again, just like buying a house for your primary resident, you're borrowing a lot of it. 80% of it is the bank's money. And of course, as the house appreciate, you do not pay the bank that part of it. They make money off your interest rate on your particular loan, right? So another type of OPM that I can share right now, it's if you're into the stock market and whatnot, you can buy off margin loans, right? So you basically buy shares of stocks on margin, and then you sell when you want to, and then you pay that margin back. All right, so that's kind of like borrowing people's money to buy some shares in the stock market that you don't have money to buy yet, but you still, because basically borrowing money to make money, right? Yeah, everybody heard of the term, it takes money to make money. So it's kind of the same scenario as OPM. And the fifth type is silent or private investors. Um, it doesn't have to be a bank. It doesn't have to be an institution of some sort. It could be your friend. It could be your grandma. It could be your mom. It could be your dad, uncle, aunt, friends, ex-wife, wife. It doesn't matter who it is. Your teacher, your coworker, anybody who wants to lend you money for you to pursue into a business or whatnot. You're leveraging other people's money, all their money, and then you either put in a little bit of yours, and then you start your little business or your venture or whatever you have in mind, right? And a bonus one would be credit cards. Credit cards, a lot of people are thinking that credit cards are a pretty bad thing, but credit cards are not that bad. So if you use it wisely, you can leverage the bank's money as well and use it for about a month. And then if you want to not pay interest on it, you pay off the balance. If you don't mind the interest, so if you have zero introductory rate for a year, then you could basically use their money for a year interest free. Once again, leveraging OPM, right? So just want to quickly, give you guys a definition of OPM and what OPMs really mean in the investor world. So in a nutshell, you're using other people's money, hopefully, to make more money, and you don't have to kind of invest 100% of your money into it. All right, guys. So until next time, I hope this video and all my videos and investment in general, you find it helpful. And if you have any topics you want me to touch on, go ahead and drop it in the comments below, and I will definitely touch on them. All right. Talk to you later, and thanks for the support. All right. Talk to you later.